So Lucas works for KL Gates coverage. He's an insurance coverage lawyer, including practice in cyber insurance. Lucas assists clients in purchasing cyber insurance and in reviewing policy wording to seek the most favorable coverage possible. Reymond is also an attorney at KL Gates, with broad-ranging experience, including a focus in cyber insurance with Lucas. So, further ado, it's Lucas.
Thank you for that introduction. As you said, my name is Lucas Tanglen. I'm a lawyer at the KL Gates law firm in Pittsburgh. I am an insurance coverage lawyer, which means I represent companies in disputes with their insurance company and insurers. So my goal in my law practice day to day is extracting as much money as we can from insurance companies to make sure that our clients get good value for the insurance that they purchase, including cyber insurance policies. So my experience includes day-to-day reviewing the terms of cyber insurance policies to make sure that businesses are getting the best possible terms and the broadest possible coverage for their cyber-related risks. Just so I get a sense of the audience today, how many people are cyber risk practitioners, cybersecurity practitioners in some way? Okay, a good number. How many people have some type of risk management or insurance-related responsibilities? Also a decent number, and it looks like some overlap, which is not surprising because it's been our experience and observation that there is an overlap and involvement of the technical experts with the insurance and risk management experts in cybersecurity, which is good in the way it needs to be done to ensure that the correct coverage is placed. So we're going to talk about cyber risk management in general, and then specifically we're going to get into cyber insurance. And more than anything, what I want to impart today is some practical tips so that you who are involved in cyber insurance, and or even you who are not directly involved in cyber insurance, can go back to your companies, have a discussion with a CFO or a risk manager about cyber insurance, and say, are we sure that our cyber policy covers the GDPR? Are we sure that our cyber policy is not written in a way that's going to wipe out coverage for an international cyber attack like NotPetya, which is the main reason we have cyber insurance, is so that we can get broad coverage for these catastrophic cyber type of events. So cyber risks, the general causes of cyber risks, you practitioners know this stuff, I'm sure, better than I do, but this is just a selection of the type of things when I talk about cyber risks and think about insuring cyber risks, the type of causes that we're looking at: malicious attacks, unauthorized access by hackers or with spyware, disgruntled employees accessing or taking information off computer systems that they're not supposed to, negligence like phishing schemes that we've talked about already today, innocent mistakes and glitches and operation errors that can result in an interruption of your business and potential multi-million-dollar losses. And more just garden variety, simple mishaps like loss of stolen devices or laptops. These are all in the broad category of cyber risks that we think about insuring. Why do CEOs and CFOs and people like that care about cyber risks? Obviously, it's because it can have a significant impact on bottom lines. This is just one recent statistic from the Ponyman Institute. Average cost of a data breach in 2018, $3.86 million. Anything in the millions sounds like a lot, but this obviously includes a lot of sort of smaller garden variety data breaches, and the expenses for a really significant cyber incident, a significant cyber attack, can dwarf this number and be many, many millions. But how do these risks manifest? How do they turn into a problem that does affect the company's bottom line? Well, if there's a data breach, a company might incur substantial expenses for notification costs to the customers or vendors whose information was compromised. There are public relations problems when a company is associated with a cyber incident, and expenses to manage the public relations and to manage that crisis. Computer forensics to get experts to come in and figure out what went wrong. Credit monitoring services that the company might have to pay for. And the list goes on and on. Business interruption is one of the most significant that I talked about earlier. If a company's computer system is down for days, just the logistics, the loss of opportunities can be truly massive. Other effects of cyber risks, there can be actual physical injury to the computer hardware, there can be injury to other property, there can be loss of valuable IP, there can be expensive lawsuits that are brought by customers seeking to hold the company liable for allowing a data breach or another cyber incident to happen. You can have regulatory proceedings initiated against you by the Securities Exchange Commission or any number of other government entities that will come asking what happened, how did the company allow this to happen. And of course, there are legal fees to pay the overpriced lawyers who come in and get involved whenever there is a significant cyber event with legal ramifications to it. This is just a little more discussion of the consequences, but I think we've basically covered the types of costs that arise to a company that underscore the seriousness and the financial risks that are involved in managing cyber risks. So, some general comments on cyber risk management. Every company, every enterprise, whether it knows it or not, is engaged in cyber risk management. The way that I think about it is four general categories of cyber risk management. You can avoid a cyber risk, you can mitigate a cyber risk, you can try to transfer a cyber risk to a third party, like an insurance company, or you can accept certain cyber risks and be prepared to deal with the financial consequences out of the own company's treasury. In any event, the idea of cyber risk management is protecting the perimeter. It's the company's obligation and responsibility in the first instance to have its cybersecurity under control, because the company is the first line of defense against cyber attacks. So a little bit on avoiding cyber risks. What does it mean to avoid a cyber risk? That could mean you simply pass on an opportunity that you might otherwise get involved in because you see a cyber risk that you can't accept. It could mean you choose not to do business with a vendor whose cyber practices aren't up to par and which you can't control and which are not acceptable to you, so you simply choose not to deal with that entity. Complete avoidance of cyber risk in the real world generally is not an option. So there may be places where you pick and choose cyber risks that aren't acceptable, opportunities that you're going to pass up, but no company can realistically avoid all cyber risks. I had someone ask me in a discussion about these different approaches to cyber risks. This was around the time when information was coming out about Facebook and people's personal information being used in ways that they probably did not intend. And how do we individually manage that cyber risk? avoidance is one option. Some people simply have quit Facebook, just as an example. Other people don't find that that's not an acceptable solution. And then there are some other ways to manage that cyber risk, as I'll talk about a little later. Mitigating cyber risk, and this might be an area where some of you have your careers based in and have a great deal of expertise in, involves using technical tools to limit the possibility of a cyber incident, an expensive cyber incident happening. Things like data encryption and cybersecurity penetration tests, cybersecurity audits, all of the type of tools that companies use to limit the chances of suffering a cyber loss. Human resources tools like training, corporate governance tools like having a board of directors that's investing in cybersecurity. How might you mitigate the cyber risk in the Facebook example? Maybe you limit the types of things that you post on Facebook, and that's how you've chosen to mitigate that cyber risk. Maybe you have decided not to accept friend requests from people you don't know, and that's a way that you've mitigated the cyber risk associated with Facebook. Just to give a personal, more personal example of how mitigating a risk might work. And transferring a risk, and this is what we will be talking about in more detail. The main way of transferring a risk is through insurance. So you have decided that you can't avoid certain cyber risks. You can't completely avoid the possibility of a data breach or of a cyber attack. You've tried to mitigate it the best you can, but there's still risk there. You don't want to be on the hook for all of the costs when one of these events happen. So another possible part of the approach to cyber risk management is transferring that insurance, buying cyber insurance that you hope will respond and step in and pay and reimburse you for the money that your company is out as a result of a cyber incident. There may be other types of insurance that can be relevant, more traditional types of insurance policies that almost all major companies have. And there are also other contractual possibilities for transferring cyber risks. If you are dealing with a vendor and you have concerns about their cyber practices and how that might affect you, you might be able to have in your contract that the vendor will be on the hook for any cyber blowback that comes to you as a result of your dealings with them. I'm not sure of a way to transfer our cyber risks resulting from our Facebook use, but maybe someone will invent a Facebook insurance policy and then you can seek coverage when something bad happens with your social media experience. And then accepting cyber risk is the fourth big picture approach, the fourth piece of the puzzle. Accepting cyber risk can take different forms. A passive cyber risk, this is what I was alluding to when I said every company, whether it knows it or not, is managing its cyber risks in one way or another. If it's doing nothing, if it's not mitigating, if it's not avoiding, if it's not seeking to transfer its cyber risks, then it's simply accepting them, and it's going to be who is on the hook in the end for the costs and the consequences of a cyber attack. Accepting cyber risk doesn't have to have that negative connotation, though. Accepting cyber risk can simply mean that you've done what you can to avoid, you've done what you can to mitigate and to transfer, but at the end of the day, there is some remainder that the company needs to be prepared to accept. It will be on the hook for if it suffers a cyber attack. And just one thing to keep in mind as we talk about cyber risk management strategies. And this is a big picture thing for a company to think about, and it's also something for practitioners to think about in their roles within the company, is who owns the problem of cyber risk management and cyber risk response within the company. It might be if the board of directors is taking a proactive approach to making sure that it has policies in place and training in place and insurance in place to make sure that the company can have an appropriate response to a cyber risk. It could be a CEO, it could be the lawyers, the general counsel or an outside lawyer. It could be the information officers, information security officers, the CFO, the risk manager. Ideally, it's all of these different pieces working in concert, understanding who's responsible for calling law enforcement in the event of a cyber incident, who's responsible for notifying insurance companies in the event of a cyber incident, who's responsible for training. The idea is every one of these groups should have some role in owning the cyber risk problem. So we're going to be talking especially about the transfer part of the cyber risk management strategy, the insurance policies. And just to give a little of my background, again, we do insurance coverage law at handout dates on the side of companies, not on the side of insurance companies. So I'm going to be later in the presentation going into some detail about cyber insurance policies, what are their features, how they work. That's not because I'm an insurance salesman. I am most definitely not. I am generally in my career adverse to insurance companies, but because cyber insurance is such an important part of cyber risk management strategy, we feel it's important for our clients to understand how these policies work and how to get the broadest possible coverage. So I'll be talking about cyber insurance policies. There are other types of insurance policies that likely can come into play in a cyber incident. Traditional property insurance policies, traditional general liability insurance policies, and the list goes on. But we will eventually get around to a focus in our talk here about cyber insurance policies. And just to tee that up a little bit, here is just some basic information on cyber insurance. And many of you may already know the fundamentals and maybe know in detail how cyber insurance works. But it's in the insurance world, in the long history of the insurance industry, cyber insurance is a relatively new product. It came about around the year 2000, and it really has exploded in recent years with more and more companies of all sizes investing in cyber insurance policies. Reading a cyber policy, has anyone here read a cyber insurance policy? Some of you have had the pleasure. In my experience, they are, even for insurance policies, they can be very dense and not inviting to read. Depending on which insurer issued the policy, they can attempt to have very technical definitions that are incorporated into the policy. The policy might have 8 or 10 different forms that all collectively form what is called the cyber policy to cover different aspects of the cyber risk. It's not the most inviting thing to sit down and read, but the only way for a company to understand what is and isn't covered is, unfortunately, to actually read through a cyber policy and possibly to have assistance looking through those terms to figure out what will and will not actually be covered. Just the high-level basics of what's a cyber policy and what it does. Insurance can be understood as protecting two main categories of risks: first-party risks and third-party risks. So the first-party risks is the cost that the company itself incurs for damage out of a cyber incident. So the first-party coverage will be those notification costs that you have to pay, the cost to repair and replace computer equipment, the cost to repair and replace your data that was damaged. And then third-party coverages refers to the loss that someone else incurs because of your cyber incident. This is the lawsuits from customers. It also generally includes the government proceedings that might be initiated against the company rising out of a cyber event. There's no standard form, so it's hard to talk in a lot of generalizations about what a cyber policy looks like and what it covers. There are about 70 different insurance companies offering what they call cyber insurance these days. And the terms and the pricing of cyber insurance, here's a bit of good news. Because of the competition in the market, it is a relatively negotiable type of insurance, especially for larger companies, but also perhaps for mid-sized and smaller companies as well. In buying and renewing cyber policies, we found that it's absolutely worthwhile to negotiate wording with insurers, to go back to them and say, we're not crazy about this wording, we think this coverage can be broader, we think this exclusion should be deleted from the policy. You don't get everything that you want, but you can get real movement and real value in doing some negotiation with insurers on a cyber policy. So we're going to talk in detail today about a couple of hot issues in the world of cyber insurance. The first of them is the GDPR. I expect many of you, maybe all of you, have heard or read about the GDPR since it came into effect last year. And one thing many of our clients have been trying to figure out is we have these potential massive fines that European governments can impose on us for violating the GDPR. Is that going to be covered under our cyber insurance? We've looked at different cyber policies to try to figure this out. The answer is it's complicated, but I'm going to turn the program over to Reymond now. He's going to give some basics of the GDPR and how it works, and then we'll get into talking about some of the insurance implications. Reymond?
Thank you, Lucas, for that introduction. Hi, everyone. My name is Reymond Yammine. I'm also an associate at Candle Gates, and I do some work with Lucas in the area of cyber insurance. Now, before we get started on the GDPR, I just want to see a show of hands. How many of you have heard of the GDPR before today? Okay, most have heard of the GDPR. How many of you know that the regulation promises fines in millions of dollars for non-compliance with it? A lot of hands as well. How many would you say you know that the GDPR promises fines to companies that may not be in the European Union and are in the US? Another show of hands, great. So let's get started with this. I want to answer, my point today in this presentation is being able to answer 3 questions for you. One, in a very broad way, what is the GDPR? 2, why should we care and why does it matter for companies that are not in the European Union? And 3, and lastly, what can we do about it? And that's a little bit of a topic that Lucas will touch upon, which is what's the cyber insurance side of the GDPR. Now, the first point, the GDPR, or the General Data Protection Regulation, came into effect on May 25th of 2018, replacing the previous directive, 9546 EC, or the Data Privacy Directive that was in place in about the mid-1990s. Now, the GDPR's stated main goal is the protection of individuals' rights and freedoms with regards to their own personal data. And I'll apologize now, as attorneys, we're all about the long sentences and what the words mean. And so if we take a closer look at the GDPR, some of their chapters, for example, Chapter 1, Article 1 says that the regulation lays down rules relating to the protection of natural persons with regard to the processing of personal data and rules relating to the free movement of personal data. It also adds that the regulation protects the fundamental rights and freedoms of natural persons, and in particular, the right to the protection of personal data. Now, what's interesting about the GDPR, and what some of you mentioned that you know, is the hefty financial liabilities that it promises to impose. We're talking of up to 20 million euros for non-compliance, or even 4% of a company's annual revenue, worldwide annual revenue. And so with numbers this high, it's always important to take a closer look at what the text actually says and what sort of implication it brings into a company's operations. First and foremost, what's the territorial scope? And that's just a fancy word for how does it apply to companies. On one end, the regulation divides companies into those that are established in the EU and those that are not established in the EU. For companies that are established in the EU, the regulation applies to all the data processing operations, whether or not those take place in the European Union. For companies that are not established in the EU, the regulation will only apply to the processing of personal data, so long as it relates to the provision of services or goods, the sale of goods and services, to members in the European Union, or the monitoring of their behavior as far as it takes place in the European Union. And monitoring of the behavior, for example, Say you have a company that is engaging in sort of a marketing analysis, and by using wireless data, it maps where customers in a building or in a mall walk around the place and what sort of stores they visit. And sort of that mapping constitutes a analysis of the individual's behavior, which would fall under the regulation of the GDPR. Now, processing of data sounds like a very, very specific sort of activity. And if we take a closer look at what the regulation actually says, the term is actually quite broad as to what processing of personal data means. I mean, on one end we have personal data, which is defined to mean really any information relating to an identified or identifiable person. An identifiable person is one who can be identified by reference to an identifier, so like a number, an anonymized number. On the other end, we have processing. Well, what is the processing of data? The processing is defined as any operation or set of operations which is performed on personal data, whether or not by automated means. And the regulation provides a number of activities that constitute processing. You know, some of them are the collection of data, reporting, organization, structuring, storage, adaptation, consultation, transmission. Really, it's a very broad list of the sort of activities that would constitute processing of personal data under the regulation. What's been most interesting about the GDPR is that it promises a number of rights for individuals who are in the EU. And some of those rights, the most prominent one is the right to be informed. So it grants individuals the right to know what is being done with their information, who's doing what with their information, through which means, for what purpose. The right to be informed when their information is modified, or rectified, or erased. Second, we have the right of access. So it grants individuals the right to access their information and being able to tell what is being kept about it. The right to rectify that information, the right to rectify any errors that may exist in the information being kept about it. The right to be forgotten, which as it sounds is the right to have all information that a company or organization might have about you deleted, erased. And that comes with certain caveats, not an absolute right. There are some restrictions. The right to restrict processing, or the right to restrict automated profiling, which is basically the right to tell a company how you'd like your information to be managed. The right to data portability, which is basically the right to have your information with you, take it away from a certain organization to another. And ultimately, the right to object. The right to object to the way your data is being used, being kept, or being collected. Now, there are no free lunches. So what is rights on one side is obligations on the other side. And so some of these rights do translate into obligations for organizations that are keeping personal data of other individuals. And some of those obligations, for example, include the requirement that companies implement the appropriate technical and organizational measures to ensure to be able to demonstrate that the processing is up to par with the regulation, what the regulation requires. And so one particular example that you can see is how the regulation applies to data breaches, for example. GDPR requires that companies that are subject to a data breach or suffer through a data breach provide certain information to users and regulatory boards. And for example, it requires that at least within 72 hours of suffering a data breach, the company inform the regulators that a data breach has occurred, and imposes a similar requirement on individuals, on informing individuals that a data breach has occurred. Now, as I've sort of mentioned before, the GDPR promises two ways of enforcement. One is a private right of action, so individuals can sue to enforce the regulation. And it's been about a year since the law came into effect. We haven't seen much action on that end, but hopefully, or with the passage of time, we might see more action. And then on the other part, we have regulatory enforcement by regulatory agencies. And that's basically, governmental bodies within each country imposing fines or restrictions upon companies. And this year we've seen some action. it's gone from, cease and desist orders, stop doing what you're doing, all the way to fines, which have ranged from 5,000 euros to all the way to 50 million euros. So there is a wide range in between. Some examples of some of that enforcement. We have in Austria, a small business was fined about 5,000 euros for was basically maintaining security cameras outside of the business. And part of the decision was, well, you weren't really authorized to be filming the sidewalk, and you never told people that were filming the sidewalk, and such, you're in violation of the regulation. A German social media site got fined about 20,000 euros for mismanagement information, and basically what it's alleged they did was keeping passwords in plain text. And the regulators were like, well, no, that's not okay. You're not complying with the regulation, and this is not proper procedure. So they fined about 20,000 euros. The next one, Portugal, a hospital was fined about 400,000 euros for what the regulators alleged was, well, too many people had access to the information, to the personal private information of individuals. And sort of what they're saying is they had a sort of loose scheme of access information, so any doctor could access anybody's records, and any nurse or any other practitioner could access those records. And the regulator said, well, you need to ensure there is some control to ensure that the personal information remains private. The biggest fine we've seen so far is by the French regulators. They fined a US technology company approximately 50 million euros for what they say is the lack of transparency in the use of personal data. They're alleging that the company wasn't transparent enough how they were using individuals' personal data. And they're saying that the terms and agreements and sort of the waivers that they're giving people weren't sufficient to really create informed consent. And lastly, we have a Polish data processing company that was fined about 200,000 euros for processing publicly available information of individuals without informing them and without getting consent from those individuals for the processing of data. And so I guess as a broad summary of what's been going on is, there's this law that imposes really high fines, and in the less than a year that it's been in effect, regulators have imposed a couple of very substantial fines to companies who were alleged not to be in compliance with this regulation. And so to that extent, it's important to take a closer look at the options that a company can take, company, organization, or individual, can take as to mitigating that risk. And in the form of mitigation, my colleague Lucas Tanglen will be discussing the mitigation strategies on GDPR fines.
Thanks, Reymond. So, sort of a scary world for some companies and some of our clients having to comply with the GDPR and figuring out what the contours of the GDPR are and what it requires of them. I think the example of enforcement that I found very interesting was the closed circuit TV simply recording people in a public space could give rise to a GDPR violation. And even though that's not inherently a cyber risk, it does give a sense of how broadly the GDPR might be applied, and what one company might think is a relatively innocuous activity could have privacy implications that the company hasn't thought about and that it might face liability over. So like I said, we have a lot of clients who have been trying to figure out, okay, we want to transfer as much of our cyber risk as we can to our insurers. Is our cyber insurance policy actually going to cover us if we face a lawsuit based on the GDPR, or if we face a regulatory proceeding based on the GDPR, or if, heaven forbid, we are hit with one of these massive, massive fines that the GDPR allows? There are several questions that we think about when we look at a cyber policy and try to figure out where's the coverage for GDPR. Cyber policies and insurance policies generally aren't written in a way that it says expressly, straight up, we cover the GDPR. You need to look at the general terms of what coverage is provided, and then as an insurance lawyer or as a risk manager, you can look at that terms and say, how can I envision GDPR fitting within these general terms? One possible challenge is the GDPR provides for a very, very broad conception of what is personal data. What's the type of personal data that's at issue in the GDPR? As Reymond mentioned, it's basically any information through which a person can be identified. So the obvious stuff like names and social security number and phone number, but also maybe less obvious things like the person's image or the person, even biometric data like a person's fingerprint. Does the cyber insurance policy cover that type of broad scope of personal data, which could be at issue in the GDPR? Some cyber policies define data, personal data, somewhat narrowly to those categories of things I just mentioned, the name and the social security number and the phone number. Some cyber policies define personal data by reference to existing privacy statutes, like HIPAA, or through a combination of those approaches. If I were looking at a cyber policy, a general thing that I might try to get into that cyber policy to ensure GDPR coverage would be a definition of personal information or personally identifiable information that's at least as broad as the GDPR's definition of personal data. So you might do this by having it expressly say in the policy, personal data includes personal data under the GDPR, or you could simply import the language of the GDPR into your cyber policy. That might be another approach. Separate from what types of data are covered by the GDPR versus covered in your cyber policy is what type of conduct is going to be covered in your cyber policy. As Reymond talked about, there's a very broad conception in the GDPR of what it means to process data for which you might be liable under that regulation. Is your cyber insurance policy broad enough to cover all different types of processing? One possible problem in a cyber insurance policy, particularly those that follow the model from the earlier days of cyber insurance, is that they tend to be focused on data breaches as the key event that could give rise to cyber coverage. So they have terms that are focused on what's the insurer's obligation to provide coverage when there is an actual data breach, which may result in things like identity theft. The problem is that the GDPR is not limited to a data breach situation. It could very well include a data breach situation, but it has this very, very broad concept of processing to include things like collecting and retaining data. If you aren't up to what the GDPR requires in your data collection and your data retention practices, you might be liable, even though you never had an actual data breach. The problem might even you then go to your insurer to say, well, we got hit with this GDPR liability because of allegedly faulty data retention practices. The insurer may say, well, that's too bad when this is a cyber policy that's focused on data breaches, and there was no data breach here. You just didn't follow the rules for data retention. A possible approach is to fixing this in your company's cyber policy. Get a broad scope of conduct expressly covered. You might be able to get an insurance policy that expressly says, we're going to cover you for your unauthorized collection or disclosure or use or access or destruction of personal information. I've seen cyber policies that say, we're going to cover you for any infringement of any violation of any rights to privacy or for violation of any privacy-related statutes. These are practical ways, practical things that you can go to an insurer or an insurance broker to and say, we think this coverage could be a little broader to make sure we're covering all of the different stuff that our company does that could give rise to cyber liability and GDPR liability specifically. And the big question that CEOs and CFOs want to know about when they're talking about GDPR and cyber insurance is, okay, we get hit with a 50 million euro fine in Europe. Is the insurance company going to pay for that? And unfortunately, even if, no matter how hard you study the wording of your insurance policy, it is a bit of an unknown right now how in the insurance markets are really going to respond when this situation comes up. So it is a good idea to start with the policy wording and make sure you're giving yourself the best chance to make an argument for coverage for this type of a fine. You might look at how your policy defines which losses are covered, what constitutes covered damages, what constitutes covered costs, and you may be able to change the wording to say, and yes, damages includes fines. It's not limited to money that a plaintiff wins against you in a lawsuit. It includes government fines. You might want to make sure that there's not an exclusion of the policy. Some cyber policies might say, we don't cover fines, say that straight up. That's going to make it very difficult to seek coverage for a GDPR fine. And you might have to look at the choice of law provision in your cyber policy to get deeper into the legal weeds here. In some states will have law that courts have made that says, no, fines are not insurable as a matter of law no matter what the insurance policy says, because fines are supposed to be a punishment. They're supposed to be a deterrent. And we are undermining what the regulator intended to do by imposing this fine if we just let you shift that cost to your insurer and you go about your merry way. So there's, even besides the actual policy wording, there are considerations under specific jurisdictional law under whether you can seek coverage for those fines. So an insurance policy will generally be covered by the law, will be subject to the law of a particular jurisdiction. So if you're a US company and you have a US insurer and there's not a choice of law provision in the policy will likely be governed by the insurance coverage law of Pennsylvania or some other relevant jurisdiction. So in that hypothetical, if you're a Pennsylvania company, you might need to research Pennsylvania law. What does Pennsylvania law say about whether fines can be covered under your insurance? The added wrinkle with the GDPR is that the EU nations in general take a very hostile view to seeking insurance coverage for fines. I think the vast majority of EU nations do not allow or do not encourage policyholders to be able to recover from their insurance companies for fines that are imposed. It's a bit of an open question now. If you have a fine imposed in Europe, seek coverage from your insurance company in America, what say does the EU have in that question of the insurability of a fine? So unfortunately, the bottom line is there's no clear answer to whether these big fines are ultimately going to be covered by cyber insurance, but it absolutely is a good idea to look at the policy wording, negotiate it to give yourself the most favorable ground possible to argue from in the event you might need to go and seek that kind of coverage. And we have a few minutes left to talk about a topic that has been in the news. The New York Times had an op-ed, I believe, about it this week, and that is, how do war and hostility exclusions in insurance policies potentially apply to limit coverage for cyber attacks that are carried out by, or at least attributed to, foreign governments? This quote alludes to the point that we made earlier about the businesses. A business is the first line of defense to a cyber attack carried out by a foreign government. These cyber attacks obviously don't know borders, so that companies rightly are very concerned about what they can do to defend themselves and to respond to cyber attacks carried out by a foreign government. As quick background, I'm sure almost everyone here is familiar at some level with the NotPetya attack from 2017. This was a cyber attack that hit businesses in the US, France, Germany, Italy, Poland, UK, Ukraine, Russia. This attack caused damage to computer systems, and it also caused massive interruptions to these companies' businesses, where some businesses were essentially forced to shut down for days at a time, losing millions and millions of dollars of lost profits. The US government eventually attributes NotPetya to the Russian government. One of the companies that is hit by the NotPetya attack is Mondelez, which is a very large food company that's behind some of the most famous brands of foods that you see at the grocery store, Nabisco, Oreo, etc. They had numerous user credentials stolen in the course of this attack. They had 1,700 servers and 24,000 laptops essentially ruined, and they say that their total losses, including their business interruption losses, were over $100 million. Mondelez goes to its property insurer under its property insurance policy to seek coverage for these losses. Even though it was a property insurance policy, not a cyber policy, this particular property policy contained express wording for cyber-related risks and for introduction of malicious code into the company's systems. So it seems very reasonable Mondelez sought coverage under this policy for its losses arising from NotPetya. The potential obstacle was an exclusion in the policy that says this policy is not going to cover you for hostile or warlike action in time of peace or war, including action hindering, combating, or defending against an actual impending expected attack by a government or a sovereign power. So what does an exclusion like this mean? And an exclusion could very well appear in a cyber policy as well as a property policy. What does that mean when a company seeks coverage for one of these massive attacks that's attributed to a foreign government? Are you out of luck and this cyber insurance that you've been paying expensive premiums for is not going to have any value? So there are a bunch of issues come up into how this exclusion should be applied. One question is, who gets to have the final word on who carried out this particular cyber attack? Does the US government, when it says it was Russia, is that the end of the story? Do we get to put Russia on trial in the context of insurance litigation and get to the bottom of what really happened in this attack? Likely not. That's likely not going to be practical. But if you have the alleged perpetrator denying its involvement, like Russia has, the policyholder is out of luck because you have a disagreement among different sovereign nations about what happened here. What if there is disagreement even within the US government? We have in the headlines pretty regularly the intelligence community telling us one thing and chief executive questioning the strength of those conclusions and the facts that underlie those conclusions. If the president is allowed to second guess intelligence determinations, shouldn't a policyholder be allowed to when it's trying to seek coverage for its millions of dollars that it lost in a cyber attack? And then there are a bunch of arguments that insurance coverage lawyers like me would make when we're dealing with an exclusion like this. What does hostile or warlike action even mean? Isn't that ambiguous? There's no battlefield. There aren't tanks rolling through. This is a company going about its business, and it gets hit out of the blue by a cyber attack. Is that really warlike? Shouldn't this exclusion require some proximity to a field of battle? And by the way, in litigation against its insurers, Mondelez is pointing out, these insurance companies are out here advertising every time there's a big cyber incident like this, saying, you better make sure you have your cyber insurance in order. We'll sell the cyber insurance to you. If the industry is going to take this aggressive position that attacks like this aren't covered, that has really significant implications for how companies do manage this particular cyber risk. Are they really able to transfer this cyber risk? And just a bit of maybe good news to close with, and this is something that you might go back to, those of you who deal with insurance policies or risk management. I think the insurance industry is somewhat sensitive to this issue, to the idea that cyber policies might be perceived as less valuable than otherwise thought if people get the perception that the insurers are not going to pay for claims like this. It may be a good idea to go back to to a broker or to an insurer and try to get some exceptions built into this war exclusion that make it easier for you to argue that no, a cyber attack I've not had yet. That's not war. That's not hostilities. We don't lose coverage for that. So here are a couple of approaches that an insurer might be willing to incorporate it into its policy to make your arguments a little more favorable in the event you are hit with a cyber attack like this. And that's what we have prepared for today. We're just about out of time. Reymond and I will be out at the K&L Gates table all day. If anyone has any questions, happy to take them there. Thank you.